Market cycles and phases. This part is something a lot of traders don't want to either understand or they don't want to use. But I really think that you need to have a general idea of how market works always in your head. For me, the basic idea of how market works is that everything is run in the phases and the cycles. And I will always go with a simple approach in my trading that we always have just 3 phases. And that every cycle is going to have 3 phases. It doesn't matter if market is moving upwards or downwards. We're always going to see same thing over and over again. So we are always going to have that phase 1, 2, and 3. But what will happen if I have, let's say, a 3-phase completed on a 15-minute time frame? What to do next? But the idea is simple. On each time frame, you are going to see the same thing repeating over and over again. And we are always going to have that same formation that will just link together to build that larger formation over and over again. So in the phase 1, 2, and 3, we are going to have again that smaller 1, 2, and 3 phases. And once we are done with the 3, we've moved to the upside. We are just going to simply see the 3, we've moved to the downside. And once we are done with that, we are going to see a 3, we've moved to the upside. Now, this part don't always need to be true. But if you have this idea in your head while you're trading, you will always have a clue where you want to trade next. And if you don't have idea how markets should work, you're always going to have that one less information that can cost you a lot of money. This way you will build rules around the phases and the cycles and always have that clear edge for your trading. Phase 1, beginning. Phase 1 follows a period of decline or rise in the market. It's simply a fight between supply and demand to take control of the new trend. We can't always get a clear structure at the beginning of a new trend. The previous trend still attracts a lot of new traders, and the fundamental picture can favor the previous direction. Expect to see some choppy movements here. We are never going to force any trades during this stage. Our goal here is to identify an early trend change and prepare ourselves for the next 2 stages. Draw a simple horizontal line at the beginning of phase 1 and use it as short-term invalidation point. So if we are in the bullish phase 1, you are going to use that lowest point of the market as your invalidation point, while if we are in the bearish phase 1, you would use the highest point that you see on the chart. Phase 2, pullback. Phase 2 is a small recovery that forms after the fight between supply and demand stops. For an uptrend, the sign that the bulls have won would be represented with a series of higher highs, and for bears, with a series of lower lows. From a trading perspective, this is a stage where we can see a lot of aggressive plays in both directions. Everyone wants to step into a new trend early, and new traders are trying to fight for final positions in the direction of an old trend. Phase 2 doesn't have a clear timetable, so it can last for a few days to months or even years. This part is more related to the time frame that you selected for searching for the phase 1, 2, and 3. Of course, if you start on the smaller time frame like a 15 minutes, is going to end much more quicker compared to idea if you start on a monthly time frame and we are in the phase 2 there, it's going to take a month to a year even. To get a clue as whether we are in the phase 2 or not, we use the Fibonacci levels of phase 1. The pullback in phase 2 should be a minimum of 23.6% and not larger than 90%. Phase 3 Momentum. Phase 3 usually starts when the big boys fully exhaust their positions in the previous trend and start cashing in on their trades. During this stage, we can determine an aggressive order size, which would turn the market around. During this stage, we can expect a strong momentum in the direction of the new trend, so phase 1 direction. The fundamental picture will also start supporting a new direction. Trading phase 3 is the best stage for trading in the direction of the trend. Day traders and swing traders enjoy riding what we call the money phase. The key to making a profit is to jump in with the large players in the early stages of the phase and not wait for a strong breakout to occur to get into the action. During this stage, we can use phase 1 as a potential measuring tool. We are going to compare the 100%, 127.2, 1618, and 200% levels of phase 1 to phase 3. If we are currently above the 200% mark, it's too late to get into any major trade. And from there, you can only chase day trades, nothing more. So if you look this dollar-yen example, we can start searching for the phases from some significant turning points. In this case, we have this high as a significant turning point and this low. It doesn't really matter where you start. I want to start from the high more because I think this example can give you the both types of the phases, so bullish and bearish. But if we start from the high, we see the drop down, so phase 1, then a pullback in the phase 2, and then a final drop down in the phase 3. Also, like we said, in the each phase, like 1, 2, and 3, if you look closely, you can see that 3 smaller subphases. This part you really don't need to done for every single pair. I just wanted to prove that every time you will just get same thing over and over again. Now, after we are done with the 3 phases to the downside, what we can see is a push higher. So a potential phase 1 to the upside, then a phase 2 to the downside, and then a final phase 3 to the upside. And again, after that's done, we can search for more bearish movements. Let's check this example. This is the Euro USD 1 hour time frame. So what we have here is more or less a bearish market. So using the high point to start our counting phase 1, then pull back a phase 2. And keep in mind, especially when we are in the phase 2, people try to make a mistake here. Always try to use that highest point as the end of the phase 2. If we are not above that 90% of recovery, it's fine. And then a drop down of phase 3. Let's see here what we have. It's more or less at the beginning that bullish move. So we have phase 1, phase 2, phase 3. Let's see another example, dollar-yen. So bearish trend. So starting from the highs. So phase 1, phase 2, phase 3. It's all that you really need to care about. Now, a lot of traders have the problem like how to know when to start searching for a bullish or the bearish phase. Now, what I like to do would just be to draw some sort of a trend line. And in case that trend line is over, so we break that trend line like we see here, in that case, I know I can use the low point as the starting point of searching for the phases. So for the phase 2, I know that I need minimum 23.6%. So before we don't get that pullback of 23.6%, I would consider that we are only in the phase 1. But if we reach the 23.6%, I can say, okay, maybe we are in the phase 2. So I would label a high as the phase 1, then a pullback as the phase 2. And if price continue to move lower, I would continue to extend my idea of this still being the phase 2. And after that, we are looking for the phase 3. Like we said, for the phase 3, we are going to compare the phase 1 against the phase 3. And we are looking for that 100%, 127.2, 1618, and higher levels. In this case, at least on this chart, we can see that price reached the 100% easily. We reached 127.2 easily, and we failed to reach 1618. But we come close. Let's see here another example. What we see here is that three-phase move, and what we are looking here to get would be that phase 2 pullback. Just I want to check if we are above the 90 and more than 23.6%. Here, phase 2 ended around 50% of the phase 1, so that tells you, okay, this can be a perfect setup for me for the phase 3. Then if we go and just compare the phase 1 and the phase 3, we want to look to play to the upside towards that feeble levels. So the first level that we are going to trade would be that 100% of phase 1 compared to the phase 3. That level's been reached easily, and 127.2, and then 1618. In this case, at least on this chart, you don't see that we reached the 1618, but I know for sure that we reached it after a few hours. How phases help your trading strategy? The idea of phases and cycle is to have a simple overview, to understand how the market works and what you could expect to happen next. We are going to use this approach to understand what kind of system or strategy should we prepare for in the current market situation. For example, we are in the early stage of phase 3 that's bullish. You should only look for trend trades in that direction toward the recommended levels. So what that really means is that if we are in the bullish phase 3, that's early stage of the phase 3, we want to only look for the long plays towards our levels like 100%, 127.2, and 1618. Or for example, if we are in the late stage 3 of the bearish move, like 200, 2618% of the phase 1, you should only look for that reversal trades. You should learn the simple rules of phase 1, 2, and 3. You can write everything down or download the phase cheat sheet and print that to use. We are going to talk more about the phases and how to use our automated indicators that signal to you everything you need once we start explaining the system rules. But for now, I can recommend pulling up a few charts and try drawing phase 1, 2, and 3 manually. you can use these few charts and just try to find phase 1, 2, and 3 on them, or load any pair you want, any time frame you want, and just start practicing drawing that phase 1, 2, and 3. We are going to give you indicator, and that's all great, but I really want you to spend at least a few hours practicing doing this manually, just because I'm sure that that part will improve your trading win rate at least for a 10 to 15%. If you have any question about the phases and cycles, or you want me to check up your charts, just post them in the comments down below.